Hello again, everyone, and welcome to another edition of Silver Bullion Television SBTV. I'm your host, Patrick Vieira. Today, our guest is Jayant Bhandari, a well known financial analyst and investment advisor from Anarcho Capital. Jayant advises institutional investors on opportunities, particularly in the natural resource sector. Jayant has written on political, economic, and cultural issues for the Mises Institute, KC Research, Zero Hedge, Maldine Economics, and is a contributing editor for the Liberty magazine. We are delighted to have him here today as our guest. Good day, Jayant, and welcome to SBTV.
Patrick, thank you very much for having me here.
Thank you for coming on. We appreciate it. I know you're all the way in India, and it's quite early there. So we appreciate you being here. Jayant, we met you at Freedom Fest back in July over in Las Vegas. Could you share with us your interest in the libertarian movement?
Patrick, there's only one way to live life, and that is as a free human being. And that is where my interest in the liberty movement comes from. Because really, we are nothing but animals if we don't have free life. And that's what I strive for. Human creativity, human intelligence comes only if we are free to actualize ourselves. And that is where my interest in the libertarian movement comes from.
Okay, it's interesting. I've never heard anyone put it that way, but it makes sense. It's a true statement. President Trump, are you a fan of his trade tariffs moving forward?
I am not necessarily against it. And the reality is, Patrick, that US has been subsidizing the world for a very long time. US provides security to the international arena. A lot of these so-called emerging markets would go into a fight with each other if the US weren't there to arbitrate between them. So I can fully understand that Trump is not very happy about the US having subsidized so many countries in the past. And so what he wants is to have a fair play between these countries. So not that I'm a fan of trade tariffs per se, but I think US needs to correct the fact that it has been helping a lot of countries around the world, and all it gets from those countries is contempt.
Okay. Yeah, regarding the trade deficits, I believe it was reported in July that the trade deficit reached the highest since February earlier this year. Exports, I think they slipped some 1%, and this has come on the back of President Trump's efforts to renegotiate trade deficits and agreements and imposing taxes on imports. Jayant, do you think the U.S. is able to balance its trade with China, or the trade deficit is something that cannot be reversed anytime in the near term?
Well, see, we are dependent on China. The world over, people consume things produced by China. China has been a great force in terms of controlling inflation around the world. You and I, our shirt and ties and so much that we wear these days is manufactured in China. Were China not there, our lives would have been very expensive. So from that perspective, China is a force for good in the world. Now, trade tariffs basically equalize each other depending on which country the US imports from and which countries the US export to. The fact remains that the US has been a net importing nation, but it has been exporting its greenbacks around the world. We all like to keep US dollar currency bills with us because that's the most liquid form of currency available to us. So in my view, some of manufacturing should return back to the US because it was thrown out of the US because of unnatural reasons, which was that America was subsidizing the world and America was over-regulating its own industry. Now, you can correct a bit of it, but you can't really bring back all the manufacturing back to the US.
Okay, yeah, because it seems U.S. is often accusing China of unfair trade practices, and this trade war seems to be one way that they're trying to even the odds. But do you agree with the U.S. that China is the party in the wrong, or is it a case that the U.S. has stopped being competitive in certain areas, manufacturing areas?
Well, US has certainly become less competitive in many areas, mostly because of the regulations that the US has within its jurisdiction. The fact remains, Patrick, that the US is still among the very best countries in the world. US is a free economy. US is a very free country. So, and that is really the country that most people like to move to if they want to live a free life and if they want to be creative with their lives. They move to California or to the east coast of the US or elsewhere in the US. So US has a lot of good things in it. But as I said earlier, US has lost a fair bit of its competitiveness because of regulations that it imposed on itself over the last few decades.
Yeah, I think a census has shown that some of these manufacturing jobs, such as electronics, electrical parts, furnitures, plastics, rubbers, things like that. What are the chances of these jobs? I know we touched on this, but what are the chances of these types of manufacturing jobs ever coming back to the U.S. under the Trump administration?
Well, I mean, none of these things take a very short time. They take a long time. Moving factories is not an easy job. And if the industry is about low value addition, which is about plastics and furniture, I'm not even sure if they will ever return back to the US. I don't even think the US necessarily want to be manufacturing furniture in the US anymore. What the US can do and does do very well is high technology and service industry. So those are the things which US can attract back within its jurisdiction by creating a more level playing field, but moreover, most importantly, by reducing taxes and by reducing regulations on its industry.
Yeah, this trade war, trade adjustment, whatever, however some people wish to call it, it's brought a bit of tension between U.S. and China. It's hit the commodities somewhat. In fact, we had J.P. Morgan come out and saying it's expecting to see a full-blown trade war between the countries. But regarding the commodities, what factors do you think contributed to the slide in gold prices since April earlier this year?
Well, firstly, the trade war between China and the US will end up as noise, in my view. These are two rational countries. Both of these countries want to do good to their own people. They are not on a suicidal path. There are many other countries like Turkey, which is on a suicidal path. But China is not one of them, and the US is not one of them. Both of these governments are trying to do what is best for their countries, or at least they are rational people. In my view, this is going to end up becoming nothing more than noise. Now, if you look at the pricing changes that happened with iron ore or coal, you see that really nothing happened to the pricing of iron ore and coal. Base metal prices fell because a lot of speculative positions got unwound in this fear of trade war. That might be an opportunity for people to buy base metals because they will revert back to their normal within a short period of time, because eventually people will understand that this is nothing but noise. Now, as far as gold price is concerned, Patrick, depends on in which currency you are asking gold price. In most of the so-called emerging markets, gold price is close to its highest price ever. Maybe it's 10 or 20% lower than its highest price ever, but gold has done very well in most currencies. Even in the US, gold has done very well. Gold is up about 32% in the last 10 years in the US, and it is up about 100 to 200 to 300% in the third world currencies. Now, what has happened over the last few years is that the market has felt more positive about the US because I think Trump is doing a lot of good things in the US, which is bringing American dollars and American investments back to the US. And because Trump is reducing subsidies that the US has historically given to these third world countries, currencies of the third world countries are suffering. The end result is obvious in front of us. US dollar has done better than virtually anything these days. But remember, US dollar is still a fiat currency, and eventually you cannot necessarily trust it in the long term. But for a lot of people in the third world, particularly, US dollar is gold.
Where you're at right now, India, how has gold been measuring against the rupee?
Well, gold has done reasonably well. Gold has gone up more than 100% in the last 10 years in this country. Remember, gold has gone up about 6 or 7% in India over the last 1 year. Despite that, gold has fallen about 6 or 7% in US dollar terms in the last 1 year. So gold has done reasonably well, and Indian stock market has fallen hugely over the last few days, and pretty much adjusted in terms of US dollar, Indian stock market is back to where it was 4 or 5 years back. From all that perspective, from the perspective of Indians, gold has done reasonably well.
Okay, it's an interesting perspective. I think a lot of times because gold is measured against the U.S. dollar, we just don't seem to recognize how it's doing against other currencies. So it's good that you've given us some on the ground info there. Do you think though this trade war, do you think it'll overall be headwinds or tailwinds for gold the rest of 2018 and perhaps going through 2019?
Well, there's so many factors that go behind the pricing of gold.
Yes.
We can't really be certain about which way things will blow. I don't think it will take too long for the trade war between China and the US to get resolved. They will come to a decent compromise and they will get along fine eventually. The problem is that there could be a lot of wars brewing right now, and there could be a lot of civil conflicts brewing right now, particularly in the third world countries. And that is where I think the pressure for gold price will come from. For example, Patrick, India is becoming extremely unstable right now. The economy is not doing well, and the end result is that these are the people who actually have historically bought gold. And when the economy continues not to do well, as I said, the stock market is not doing well, Indian currency has fallen about 15% this year. When people become fearful, they only increase their buying of gold. The only constraint they have is their economic situation. If they don't have savings, if they don't have cash, how can they buy gold?
So overall, Jayant, in your opinion, do you think it's a good time for investors to be holding gold at this time? Is there a strong reason for investors to be holding gold?
Particularly for people of emerging markets, and I'm so-called emerging markets, and I'm talking about all the way from Turkey to, let's say, Indonesia. These are the people who have historically bought gold because it does not really make much sense for these people to invest in their own economies. Their investments do not generate decent returns. They usually generate negative returns. And that is the reason why they have historically bought gold. Now, over the last 1 decade or 2 decades, these countries have grown economically, but they grew economically for extraneous reasons. They did not fundamentally change their economic structure. Look at Turkey, Patrick. It's a very interesting example. if you look at how GDP of Turkey has grown over the last 20 years, the growth has been exponential, but instability in Turkey has grown exponentially as well, exactly when the GDP was growing exponentially. And that is the problem with these so-called emerging markets. They are very unstable. And that is why, although people were distracted over the last 1 or 2 decades, they were investing in their own countries, hoping that their countries had fundamentally changed. They are now starting to realize that their countries haven't actually fundamentally changed, and it really doesn't make much sense for citizens of these countries to invest in their own societies.
We've been talking a bit about physical gold. You're making some interesting points, but on the other end, the gold miners. Um, how has the gold mining sector been affected by the sliding gold prices?
These are two completely different beasts. Gold mining is gold mining and gold is gold. Gold mining is an industry, it's a business. And in an ideal situation, in a perfectly ideal situation, gold profitability of gold mining should have virtually no effect, should not be affected because of the changes in gold price. Uh, what has historically happened, and if you look at how gold mining companies have invested in the past, is because they have invested in very uneconomic deposits. They have destroyed a lot of capital and they have destroyed a lot of their profitability because of their wrong decisions. So gold mining have destroyed a lot of wealth. The result has been that gold mining companies have underperformed gold over the last 10, 15, or 20 years. These should be looked at differently. Investors should invest in gold mining because they are investing in a business, not because they want to find leverage to gold price using gold mining as the vehicle, which is completely erroneous in my view.
Another precious metal out there, silver. We've seen the ratio move to a high of 84.1 this month, September. It's the highest since, I believe, the 1990s. It's signaling an undervaluation, or it's signaling that it's undervalued to gold right now. Jayant, what are your views on silver? Do you think silver is a good buy right now?
I don't necessarily have an opinion based on this ratio, Patrick. I think just about all commodities are correlated in a certain sense because the kind of labor and fuel and costs associated with all commodities are pretty much the same. So they are all correlated in their pricing. But I don't worry too much about this ratio between gold and silver. I see no fundamental reason why people should worry about this ratio and why they should be inclined to invest in silver necessarily because of this ratio. I think they should invest in silver anyway, just because it's a way to preserve their capital in the world which is becoming very unstable, and for people in the third world countries where their economies are becoming very unstable as well. So you should have a portfolio of gold, silver, and other investments that can protect your wealth.
Would you mind sharing if there are any gold miners or silver miners that are on your radar right now?
Well, one company that I quite like is Anarcho Gold. The ticker is AGC in Canada. And this company has done, is, in my view, very underpriced for what it has in its projects. And that's, of course, a company I'm very well invested in. There's a company called Evrim, and the ticker is EVM. It has a project in Mexico. And I think they're finding some lot of good grades from their drilling. And that is a company that I have my eyes on.
Okay, thanks for the tips, Giant. IMF, they recently warned that the world economy is still at risk, basically, for another financial meltdown. And global debt levels, they're far above the 2008 levels, and we had that crash. Um, but how do you view the global economy? Do you think we are due for a major crisis once again?
Absolutely, Patrick. There is absolutely no doubt that global economy is going to face a lot of trouble, and I'm talking particularly about the third world countries, and these are two-thirds of the world's population. You look at you know you can look at virtually any third world countries, from Philippines to Indonesia to Malaysia, Myanmar, Bangladesh, Sri Lanka, India, Pakistan. A lot of these countries are suffering hugely. Africa is a basket case. South Africa, which was among the better countries, is facing huge civil problems. And this country might be heading for a civil war. So this will create a huge amount of social and political problems around the world. My view continues to be that the best places in the world are West Europe, the US, Canada, Australia, and East Asia. East Asia is one of the most stable parts of the world, but everything outside these countries, which is everything outside the Western world and East Asia, is very unstable, and that will lead to a lot of social and political problems around the world.
But this piling on of debt, do you think it'll ever be paid down through productive economic activity, or we realistically should we be expecting a default?
Well, I mean, debt creates systemic risks in every society. My grandmom knew it much better than a lot of these economists today. She told me not to ever take on any debt ever, and which makes a lot of sense. You can be as confident as you can be about the investment decisions you might be making, but you should not depend too much on debt, because things can go against you anytime, and things do go against you, and we live in an interconnected world. If ever something goes wrong with one institution, it affects every other
Yeah.
institution as well. And the end result is that you should try to reduce and minimize systemic risks. And one of the biggest systemic risks that we suffer from everywhere in the world today is debt levels, and that is a product of fiat currency and Keynesian economics. China suffers from it, the US suffers from it, Singapore suffers from it. People don't even mention Singapore, but Singapore has a huge debt level today. Singapore, South Korea. We should try to minimize these credit card debts and public debts and private debts. People are just loaded with debts today.
Yeah. Singapore's debt, would you say that's more like a sovereign debt or public debt?
I think there's a lot of private debt in Singapore. I don't really know the exact details, Patrick, but when I was looking at the gross debt levels in Singapore, that actually was quite among the highest among many countries.
I believe you mentioned two-thirds of the population. They're going to be affected with some type of economic meltdown. I suppose your view is this is going to be far worse than 2008, with more people that are going to be caught up in the crisis.
This will be much, much worse than what we have seen since the Second World War. The problem, Patrick, is that these third world countries are imploding. The problem is that international organizations are refusing to see the truth about what is happening in these third world countries. There is virtually no news about South Africa, for example, or people still continue to romanticize India. India is imploding. India has become extremely unstable. And the problem, Patrick, is that since the departure of the British from these countries, from Europeans from these countries have not been able to manage their internal affairs properly. They're incompetent to run their own institutions. The institutions of the third world are falling apart. And you can see that in Turkey. You can see that in Pakistan. The Middle East is a basket case. India is imploding. And remember, these are 4 to 5 billion people.
Yeah.
And the populations of these countries are about 3 to 5 times as much as what it was 50 years back. So when things go bad in these countries, it will be a massive and big humanitarian crisis. And things will certainly go bad because these people are completely incompetent to manage their countries. They can't keep their countries together.
Yeah. Given the size of the central bank's balance sheets, you think they'll be able to bail us out like they did in 2008?
There is no way out of that, Patrick. I mean, printing fiat currency does not generate wealth. How can you bail anything out by printing cash? You have to generate wealth. You have to create an entrepreneurial society and a creative society. You have to provide it security to be able to create an ecology to create wealth in a society. Printing currency actually does not only does not create wealth, it actually destroys wealth because it takes away focus of a lot of people away from wealth generating activities and into speculative activities.
Okay, so given all this economic uncertainty, Jayant, your opinion, how should we be investing? What assets, or you yourself, let's say, what assets would you be buying?
I invest in mining companies and I invest in junior industry. I understand. I continue to be optimistic about the short term and the medium term future of the Western countries. I'm very optimistic about the future of East Asia. Singapore, Hong Kong, Taiwan, China, Japan, Korea are doing very well, and I think they will continue to do very well. And these countries will also be beneficiary of the instability that will be happening in the third world and eventually in the Western world. So my focus often is in the West, is about investing in the Western countries and about investing in East Asia. The fact remains, Patrick, that people are too worried about, let's say, China. China is, in my view, has consistently grown, and people have been worried about China for the last 20 years. China has done very well. It continues to grow. Now, there are many problems in China, but which country in the world does not have problems? Chinese society wants to grow economically. It's not a fundamentalist society. And my view is that this will continue to grow. And what Trump is doing in the US is doing the right thing for America. Focus on these two places. And these are two big economies. And that is where focusing on these two countries should help you preserve and create wealth.
Okay, that's some good points. We appreciate that, Jayant. But before we wrap up, could you let our listeners know how they can find you and see more of your work?
Everything I do, Patrick, goes on my website, which is jayantbhandari.com.
Okay, Jayant, we appreciate your time. I know it's early in the morning there and you're about to start your day, but again, thank you for coming on and we appreciate it.
Thank you very much for having me, Patrick. Thanks for the opportunity.
Thank you also, Jayant. I like your grandmother's advice. Grandmothers know. They always know. That was Jayant Bhandari of Anarcho Capital. For more of his insights on precious metals and the global economy, please visit his website, jayantbhandari.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content.